Hello and welcome back. Right now, I am using the USA version of Quickbooks Online and to be particular, the advanced version of the USA. This toolbar here will keep reminding you that I am using a different version now. Now, the thing that is different here is that in Quickbooks Online USA, if you navigate to this Advanced Accounting tab, you will have this fixed asset module. And if you look at this module, you can see that you can add an asset from here, and then you can see all the details of the assets you have added earlier, and the system will automatically run the depreciation. Now it feels like that the fixed asset accounting would be very straightforward, but the reality is we still have to do a lot of steps ourselves. First of all, we got to have the ledgers for the asset that we need to record. So for example, if we want to record the machinery, we need to have a ledger for machinery, but we also need to have a ledger for the depreciation of machinery, and we also need to have a ledger for the accumulated depreciation of machinery. So first of all, let us navigate to chart of accounts from here, and let us see which ledgers we already have that are relevant to machinery. So let us search here, and you can see there is no ledger available for machinery, which means that we will have to create all of these ledgers ourselves. So let us quickly do that. Let us click on new. Here I would say that this is going to be my ledger for machinery. Account type is going to be fixed asset, and this account is going to be machinery and equipment. We don't have to add any of this information. We can simply click on save, and this account will be saved. Now let us add a ledger for accumulated depreciation as well. So click on new, and now the name is going to be accumulated depreciation for machinery. The account type is going to be fixed assets again, but here the detail type is going to be accumulated depreciation. And let's make sure that we make this a sub account, and the parent account for this is going to be machinery, that is fixed asset. We can leave all these details and then click on save. And now we also need to have a ledger for the depreciation as well. So click on new here. The account name is going to be depreciation for machinery. The account type is going to be other expense, because we want to keep it separate from the expenses. So other expense, and this detail type is going to be depreciation, and then we can leave all this information and click on save. Or alternatively, we can do one more thing, and that is we can make this account a sub account of the depreciation line. Equally good, you can use either approach. So I will just leave it like that and click on save. So now that we have the relevant ledgers, we are ready to add our machinery as asset in our QuickBooks Online. Now how do we add the asset in QuickBooks Online? Previously, when we did not have this module, we learned that we have to add an expense or bill from here, and that is what we will still have to do. We will still have to record the expense or bill to record the fixed asset, but in addition to that, we also have to come here in this advanced accounting tab and add a fixed asset from here. So these are now two steps. So what usually people think is adding this asset from here will do the job, but that is not the case. So let us add the asset first from here, and I will show you that it will not show up in the balance sheet until we record the expense for that. So let me click here on add an asset. Here we are supposed to enter all the details that are not just relevant to the purchase of asset, but also that are relevant to the depreciation. So let us begin. Let us say that we have just purchased an X-ray machine for our business. You can add some description. The class and location can be used so that asset can be allocated at the right class and location, but right now we don't need that. I can move forward. If this asset is non-depreciable, for example land, you will just check here and all the questions that are related to depreciation will disappear. You can see all of these fields have been deactivated. But in my case, my machine is depreciable, so I will use these fields. First of all, the purchase price, let us say that is $1,000. The purchase date is the beginning of June in this case, so I will just select that. The depreciation start date is also going to be the beginning of the June. Now this is important. There may be a difference between the purchase date and the depreciation start date because sometimes the machineries need some implementation before they can be put to service. And then depreciation method. Here you can see system is automatically giving you these three methods. You can choose any of them that is relevant, so I will go with the straight line for now. And the useful life in my case is going to be 2 years, and the salvage value I would consider is going to be 280. So you can understand that if the purchase price is 1000 and the salvage value is 280, the depreciation calculation is going to be 1000 minus 280, that is 720 divided by 2 years, which means 24 months. So monthly depreciation in this case would be 30, and that is what system should calculate. Of course, we don't have to calculate the depreciation manually. System will do that itself. I was just showing it to you so that when you later see the amount of depreciation, there is no surprise. Now let us enter the remaining details. For example, here we have the asset account. So I will just find the asset account for machinery that we have defined. And then the accumulated depreciation account, I will just again find the accumulated depreciation for machinery that I have just defined earlier. And then the depreciation expense account, let us find that as well. You can see we have our machinery depreciation account, and now just click on save and your asset has been defined. And you will notice some interesting information here. First of all, system is telling you that the asset has been added, but the first automated depreciation will be posted on June 30. That is what we expect from the system. And then after that, system is telling you what method have you used, the basic information, and then system is telling you what is going to be the depreciation for each annum. Now how is this being calculated? Remember I told you that the depreciation per month is going to be 30. So in the year 2025, from June to December we have 7 months, so 30 into 7, this is going to be 210, and then 1000 minus 210, the remaining value would be 790. In 2026, 30 into 12 months, this is going to be 360. And in 2027, remember that the remaining life of the asset would only be 5 months because 7 has been done here, 12 have been done here. So out of 24, only 5 months will be remaining. So we would say 5 into 30, that is going to be 150. And with all this depreciation, at the end of the useful life, the remaining value of the asset is going to be 280. So before we start looking at the values at different years, let us first take a look at the end of June 24. You can see the report on the 1st of June or at the end of June and see if your asset is appearing in the balance sheet or no. For that, let us go to the balance sheet report and run it at the end of June 2025, or you can even run that at the beginning. And let us scroll down and try to find our machinery. You can see that in our fixed assets, there is no machinery that we have just recorded. It is not appearing. And why is that so? As I told you before, recording the fixed asset just from the fixed asset module will not make it appear on the reports. So you still got to record an expense or bill. If you have paid the expense, you will use this option. If the bill is still payable, you will use this option. So let us say we have paid for the machinery. Let's go to expense. Let us quickly add this expense. First of all, let us say that our pay is going to be US tech company. Let us add this as a new supplier. Enter all the details that are needed for you and just click on save. And now You can enter all the remaining details. For example, I would say I paid for this from Bank of America account. The payment date was the 1st of June 2025, and then payment method, all these fields are optional. You can leave that. In the category, I will choose the machinery asset account. I repeat, machinery asset account, and the value is going to be 1000. You may like to add some description. For example, you can say x-ray machine, and you can add these details as needed and just click on save and close. And now if I go back to my balance sheet and refresh this report now and come back here, you will notice that now in the fixed asset you have an asset of $1000 appearing in the name of machinery. So the first step of recording of the fixed asset has been completed, but for the second step no input is required from us. You know that depreciation will automatically run at the end of the month. No input will be required from our side, so we will only need to do any further accounting for this specific fixed asset when we dispose it. So we are using the fixed asset module of QuickBooks Online in the QuickBooks Online USA, and we have already recorded an asset and we have seen how to set up for depreciation for that asset. Now let us talk about another case, and that case is we have to record a fixed asset in QuickBooks Online today, but we purchased that at some point earlier. So we have to handle the depreciation for the past. QuickBooks automatically won't handle that. We have to manually input that. So how will that work in QuickBooks Online? Let me show you. First of all, let us add an asset. Let us say that we have purchased an ultrasonic machine. You can enter these details, that is optional. Let us add other details. Let us say the purchase price is $600 and the purchase date is 1st of January. And you also started using this asset on 1st of January, so you have to begin your depreciation from this date. Now you may be thinking why you are entering this now in June. Well, the simple reason can be that you were not using QuickBooks Online previously and you have just started using that. Now since you were not using QuickBooks Online, you may be using some other accounting system, or you may be recording it manually on Excel file, or maybe you were just not recording depreciation at all. But now that you are using fixed asset module, you have to follow the discipline of depreciation, and you have to start your depreciation from here and calculate these values accordingly. So I would say that my depreciation method is a straight line. The life of this asset is 3 years and the salvage value is $60 only. So we have to enter the accumulated depreciation amount. You can enter that yourself, or you can instruct the system to calculate the accumulated depreciation using these values, and if you click here, system will automatically calculate this value. Now how this value has been calculated, let me demonstrate that to you. So our value, the purchase price was 600 minus salvage value, that is 60. 540 is the total depreciable amount. The life is 3 years, which means 36 months. So I will divide that by 36. So our per month depreciation is 15. Now it is started from January and right now we are in June. So for June, system will run the depreciation itself. We just have to record till May. So Jan, Feb, March, April, May, 5 months. So let us multiply this with 5 and you can see system has calculated the correct value. With this, now we can just enter the remaining details. For example, asset account. We know that for machinery we are going to use this machinery account. Same for accumulated depreciation, the machinery one is going to be used, and for depreciation we will use the depreciation for machinery account. And with this we will just click on save and your asset will be entered in the system, and you can see all these details for the asset. You can see that the first automated depreciation will be posted on 30th of June. With this, let us go back to our main screen and you can see the detail about this ultrasonic machine here as well. Now to see the depreciation actually running, we will have to come back here at the end of the month so that we can see the depreciation entry as well. Now before I wind up this lecture, let me remind you, entering the asset from here will not make it appear in the books of accounting. We still have to record an expense or bill to record the purchase of asset. So let us add an expense, and let us say that our supplier is the same company, that is US Tech. Now as you would select this one, you will see that all these fields will be pre-filled using the previous expense entry, but don't worry, you can change that. So let me click on this, and you can see that these fields have been filled, but we can change that. So the payment has been made from Bank of America. The payment date is 1st of January, and all these fields are optional, so we can skip that. Category is machinery. The description in this case is ultrasonic machine. The amount is $600 only, and now just click on save and close. And now your fixed asset purchase has been completed in 2 steps. In the previous lectures, we have just added 2 of these fixed assets to our system. For this asset, we just added it on 1st of June. So the depreciation will be run in the month of June and onwards. And for this machine, we did added the previous depreciation as accumulated depreciation. And now we expect that at the end of the June, the system will run the depreciation for the month of June. Now let's go back to the system. Today is 3rd of July, and today I expect that the system would have run the depreciation. So in the QuickBooks Online, let us navigate to the Advanced Accounting and Fixed Assets. And here you can see we have depreciation of $30 for X-ray machine and $90 for the ultrasonic machine. Now remember that for this asset, the depreciation per month was 30, so system has just run this depreciation for 1 month. And for this asset, the accumulated depreciation that we added till the month of May was $75, and then system run $15 for the month of June. Now to see that entry, or to see that that transaction has taken place, let us go to the reports, and let's go to the report journal. Let's run this report specifically for the end of June, that is 30th June. So 30th to 30th, and I should be able to see the entries. And here you can see, let's ignore this top one, we did not add that right now. We just added these 2 machines ourselves. So you can see for ultrasonic machine we have depreciation of $15, and the other side is being posted to accumulated depreciation. And similarly for X-ray machine, we can see the entry of $30. Now if you like to see who added this entry, you will click here, and system will take you to the entry it has posted. Here you will go to more and click on audit history, and here you can see that system has posted this entry itself on the 1st of July. Now I would advise you to run the profit and loss statement and the balance sheet report and see the impact of this entry on those reports as well. So if I can just quickly show you, in this entry you recorded a depreciation expense which should be reflected in the profit and loss statement, and you recorded the accumulated depreciation, which means that you reduced the value of this asset to be reflected in the balance sheet.